Good morning, everyone. Today's Monday, December the 17th, and this is the Futures in 5. Taking a look at the ES, we are continuing to fade. This contract is going to lose its low at 25.87, but we've got a lot of drift. A couple of things are going to happen. We have the FOMC week in view. The meetings begin today, and we have the FOMC release on Wednesday. On top of that, we have a very big holiday event, and so volumes are going to be limited. With that said, what we are looking at, we have to find from much larger time frames. And so if we lose 25.88 to 25.84, our next stops will be 25.71 and then 25.52. Potentially, we could stop at 25.63. But those are some numbers that we can keep our eyes on. In general terms, if we do lose this region, these are going to be the areas that we dip more closely into, and we're not going to be able to see that unless we use a composite chart. Right now, we've got a bottoming, we have some technical divergence, but in the end, everything is very bearish. So bullish trades are going to be the outside event until we see a general shift of motion. That is the same for the NQ. Now, this NQ contract does see itself lower. 65.30, I think, is a very interesting level that we need to watch, but we can also see numbers in this particular contract that go all the way to 64.80. That's going to be news for us to look at as well. Do we have technical divergence? Yes. Traders continuing to sell off. Could be opening up, filling in of this volume profile where this congestion is. That's where I would anticipate that first motion. You want to watch for the failed retests of these levels to participate and then trade level to level, because the last times we were here, folks, across the board, we chopped like crazy. So you can't look at this and go, ooh, I wonder if it's going to break down. I wonder if it's going to break down. And when it gets to here and it tests that level, you say, oh my goodness, there it goes. It's breaking down. And then it bounces, because that's what everybody's doing here. Every single thing we see here is that once we get to this area, there is a recovery event. Now, is the landscape a bit different? You betcha. But it's still something to watch. You've got to be very careful about it. YM breaking down into lower levels as well. This is also a contract that from this contract, we cannot see the lower levels. We must move into some sort of composite event. That composite event brings us deeper support action all the way into, let's see, 23.927. That's first this edge right here, or so. We'll leave it at 22. And then the bigger levels much further away in the chart. We haven't seen those price points since April, and they are going to descend fairly quickly. Again, it's a space that's got a lot of potential bounce congestion, or it could collapse straight through. Your job as a trader is to say, well, wait a second, if I'm sitting near my zero line and I know every time I come here I see a bounce zone, what am I supposed to be doing? That's going to be being very careful, watching for your relative support action. And let's see, 74. Those regions that we need to watch very carefully, as the chart fades. This is very, very messy. People are very content. They're thinking that, you know what, we've got ourselves a trend. And it could be the case because there is a lot of momentum. My thought is, you know what, I like to see what everybody else has done in the past at these levels. If they break, I know that it's likely I go into a deeper support zone, but if they bounce, I'm going to be prepared for that as well. Take a look at what happened here. This morning, this thing bounced right off of our 5150 area. We know this region very, very well. It's been a congestion zone and the volume point of control for several weeks, and we're doing it here again. This is going to give us another bounce zone. What are we doing? We're trading in a wedge. Take a look at this. Do you see how we have lower highs and higher lows? Yes, that's a wedge formation. I have no idea when it's going to break. I don't. But what I do know is that my ranges are tightening, and I need to watch them hold before I can participate. I can't simply assume that it's going to hold because my formations are generally negative to neutral. All right, so I'll wait for it to fade, watch it bounce, then participate, and again, from the reversal zone, exactly the same way. These guys, of course, are bullish charts. We know that up above 145, excuse me, 1245 is significant old resistance, new support. We're coming from underneath. We have negative drift. We know it's likely to reject at the first pass. It is. It's likely to reject at the first pass. Could it break out and then reject? Absolutely. That's the way that goes. What we have to do is pay attention to the motion in general and say, what's it telling me overall? And this also is locked in a very tight channel. Well, it's not very tight, but it is a tight channel of congestion. All right, that's it for the futures in 5. Good luck trading today.